What's up, everybody? Welcome back to the High Performance Trader. And today I want to talk about using a very simple strategy, right? Day trading is complex as you make it, right? And I'm reading this new book right here, and I highly recommend it to everybody, right? The 7 Habits of Highly Effective People. This book is a game changer, right? Because what this book helps you realize is this. Look at this page right here, right? It's going to say stimulus and response, stimulus and response, right? And basically what this means, in a little background here, is I used to work in the radio frequency industry, right? So I studied radio frequency, I studied viswar, return loss, PIM. We would generate signals using an analyzer, and we would measure these signals, right? And it was really cool. This is how our phones work, right? This is how you're actually watching this live stream right now. Is this live stream, this video, this data is actually traveling on a frequency band, right? So there's multiple bandwidth, right? There's 700, there's 1900, there's 2100, there's 2600, there's 3500, right? And this is all the different megahertz and gigahertz that the data travels on. Josh, why are you telling me about this, right? Well, we always talk about universal principles, and we talk about how the world is governed by them, right? And stimulus and response is another one, right? Like I'm always referencing Newton's third law, right? For every action, there's an equal and opposite reaction, right? So it's really cool here. If you look at this, right, and just real quick, it says right here, the basic idea is that we are conditioned to respond in a particular way to a particular stimulus, right? And why is this so important, right? What up, Todd? I know my boy killed it today, right? So, but basically back to what we're talking about is every stimulus gets a certain response, right? And what's really cool is you can learn to change your response, right? So a stimulus would be us identifying our edge, identifying our strategy. A response would be entering into the position, right? A stimulus would be, oh, the trade's going against me. So the response is either I stay in the trade and blow my account, or I exit the position. And that's why it's so important to understand these principles, right? Because they don't just operate in radio frequency. They don't just operate in the universe. They literally operate in the market each and every single day, right? It's a really cool concept, right? And I'm thankful to have knowledge in it because it helps me better understand the decisions I'm making, why I'm making them, and of course, the market, right? So enough about that. Let's dive into the market, right? So let me pull up my screen over here. Today was a phenomenal day, right? So I'm going to do the last 2 days, right? So the first day I'm going to do is over here. What is this? This is Tuesday, 12/17, right? So basically, in a nutshell, I want to break down 2 trades, right? 2 very simple setups. I'm going to highlight previous day high right here because that was extremely effective. And I want to show you guys the strategy, right? So how the strategy works is I don't put on a trade unless, hold up one second. Let me just do this. So that, okay, here we go. So I will not put on a trade unless my edge is present, right? Well, why do I always say that, right? Well, I say that, and it's the same exact thing we were just talking about with stimulus and response, right? So you have to ask yourself, what sort of trader are you trying to become, right? Are you trying to actually make money in this game, right? Are you trying to see consistent results, or are you just trying to be green for the day, right? It's very important that you ask yourself this question, right? This was a very big conscious decision that I had to make, right? And I think it was around like year 3 where I was like, okay, am I doing this because I've conditioned myself to trade, meaning I'm addicted to the thrill, right? For a very long time, I showed up to the market, put on a trade completely based off emotion, right? Completely based off the fact that I just wanted a green trade. I wanted to feel good about myself, right? I was chasing bad setups. I was acting super irrational. I was impulsive as all hell, right? These are just other ways of saying I was FOMOing into trades. and I was letting trades go against me and hurt me, right? So you have to ask yourself, why are you doing this? Are you doing this to make consistent money, right? If that's the case, what is your approach, right? This is why High Performance Trader has dove so deep into our edge, our strategy, the data behind it, how well it works, the win ratio, how to execute it. Because if we can't understand that, if we are not extremely clear with that, that's where the bad decisions start to come in, right? There's tons of veteran traders on HPT, and all of them will attest. If you're not clear on your strategy, you're going to fumble. You're going to be impulsive. You're not going to trust it. You're not going to hold trades. You're not going to let your winner, you're not going to cut your losers. You have to be extremely clear and understand, okay, what's my criteria? And listen, I get it. The market is the most unstructured environment in the world. There's literally, look at this chart right here. There's so many factors all over the place, but we don't have to understand all of them. We just need to understand the concepts, the principles, right? And what are they, right? We all know, number one, the critical level. Why do we trade off the critical level? Well, number one, it tells us the story. It literally has all the liquidity, right? Large money moves the market. So if we're going to make any educated guess, it has to be off of what's happening off the critical level, right? So over here, we got open print, right? We got previous day low, which is this gray box here, and price just sells off. We can't find our edge. There's no moving average cross here in the morning. I actually was taking my daughter to school. I wasn't able to get in front of the market until like right here, right? So now as price is rallying back into open print and back in the previous day low, I have no move. I have no move right here, right? And I don't know, call it what you want, but my edge is not present here on this left-hand side chart, right? I don't want to short the market because my moving averages are, relatively bullish, right? My EMA cloud is green, right? I don't want to short, I'm sorry, I don't want to, and I don't want to long the market because we're coming right in the previous day low. And if you whip out the 1 hour over here, you'll see the structure was relatively bearish, right? So as of right here, I have no trade. So once again, being very clear on what my edge entails helps me sit on my hands, right? I used to be one of the most impulsive traders, guys. I'm not like, no lie. I'm talking like green candle, I'm getting in, right? I was so impulsive and it was extremely frustrating. And all what that was because I wasn't extremely clear on what my edge was. I didn't back test the data, right? I had no confidence, no control, no conviction, right? The triple C's. So anyways, price comes up here in the previous day low. Let me whip out the Discord here and I will tell you guys exactly where I got in the trade. This was the trade right here. Quick little highlight. It was 150% return, right? A complete banger here on SPX. Very simple. You can see here I got in short right here, like right before 2 o'clock here. But I literally sat on my hands the whole morning. Right. And I'm not over here going, oh, look at me. I'm extremely disciplined and patient. That's not even the case. The thing is when you are extremely clear, it doesn't make sense to chase bullshit. I use this principle. I use this concept with all my clients. I go, are you going to get in your car tomorrow and drive on the wrong side of the road? Are you just going to go out of nowhere? Hey, I got to get to work really fast. There's no traffic on the left-hand side of the road. I'm going to go into the left-hand side of the road and book it all the way to work, right? Is anybody going to do that? Absolutely not. Why? Well, number one, the risk, right? Is dangerous as hell, right? You may get killed. It's a dumb idea. The risk reward is off, right? So you are not going to do that. It does not make sense to do that, right? So there's a lot of like trader gurus out there, right? And they're like, oh, you just need discipline. Right? You need patience, right? Don't do that dumb shit, right? And don't get me wrong, they are right. But if you can convince yourself and start to understand why those decisions don't work, it's way easier to sit on your hands, right? Like seriously, I sat on my hands all morning yesterday and didn't take a trade until we fell back below open print. I got the moving average cross right here. I'm below the 50. We fall below open print. And look, green bar ignored in the market short, stop above it, right? So once again, I only want to make trades. This was the candle. Look, no green bar got ignored until this one, right? Once again, moving average cross, critical level, green bar ignored short, stop above it, caught a glorious move here to the lows. Hold on, guys. I got to grab this package. Hold up. Oh, man. What's up, brother? You just made my daughter's birthday. This is literally her gift. Good, man. Really good. Really good. Yeah. You in the gym?
I've been losing weight.
That's my boy. Bro, listen. Bro, become the absolute best version of you. Give that shit to the world. That's all we can do, bro. At the end of the day, that's all we got.
Right. You
Bro,
look good, man.
Thank you, brother. Listen, have a great Christmas. See, that's what I'm talking about, man. People got good energy. People are doing extremely well. Got the mailman inspired. Anyways, right? So look at, beautiful trade here. Let's just go back right here in the Discord here. SPY alerts. Yeah, this was a banger right here. Look at this. It was right here. Short here targeting the lows. Right here at 131. Stop at 60453 using cloud here, right? And once again, I'm just using my moving averages, right? Once I enter the trade, it's now up to the market, right? It's not up to us to predict anything. We cannot predict anything, but what we can do is follow principles that work over time. It doesn't need to be 100%. Nothing in the world is 100%. You don't have a 100% of making it to work alive tomorrow, right? There's nothing in the world is 100%. But you do not drive on the wrong side of the road. You drive on the right side of the road because it makes sense, right? So learn to understand your edge on that level, and it's way easier to not make irrational, unlogical, emotional decisions in the market, right? Oh, my man, screwed that up. Got my daughter's Hello Kitty balloons over here. Don't judge me. It's just her birthday. All right, so that was yesterday's trade. It was a phenomenal trade. I was extremely proud of that trade. You can see here, I booked it at 3:22 p.m. Market literally looks something like this. Josh, why'd you sell right there? Because I'm fucking Houdini? No, because I'm extremely extended from the moving average. See, guys, like, you do not need to be Houdini. You do not need to predict. You do not need to always be right. You just need to study price action. Study the moving averages. What's a healthy trend? What's an unhealthy trend? What do your principles tell you, right? Well, my principles tell me when I'm more than 50 cents extended away from my moving average, there's a very high chance of a pullback. I'm trading SPX puts right here. It's literally, I think it was 30 minutes before the end of the day. It did not make sense to hold. 0-day options, which is why I made 150% on that trade. But so once again, learn to understand your environment and the tools you're using, right? So into today's trade, right? I took one trade today. It was in the morning. I was very proud of it. Let's break it down. First things first, let's look at the pre-market plan. We'll go through this quick. SPY pre-market plan, right? Very simple. Wait, where is it? December 18th. Yeah. So market looks something like this. We had a gap up here that I was watching. This 606, what is this? 76 level, right? So look at, I'm looking here for buyers to control the 50, possibly, and then get back up and fill this gap, right? So that's basically what I'm doing. Getting a large gap up in pre-market. I'm looking for buyers to defend their positions. Ready? This is it. Looking for acceptance at the market open and above 606.76. Okay. Looking for acceptance at the market open, right? So now let's fast forward here to today. Price was looking good, and then we sold off, right? So now we're down. We're below end of day. We're below previous day open print. And we got previous day high right in front of us. Now, watch, this is going to be really good right here. So I used to be the trader, right? And Todd, you actually helped me out tremendously here with this issue I used to have. I used to be the trader that would see his edge here, right? This is my edge, moving average cross, red bar ignored, off critical level, right? This is my edge. I used to be the trader that would go, I don't want to long into this critical level. I'm going to wait. I'm going to wait because I'm not sure. No, see, fuck that. Excuse me. If you have an edge, if you have a strategy, which is critical level, RBI, GBI, moving average cross, if that is your entry criteria, when you see it, you better pull the trigger on it. You better pull the trigger on it. Take my advice. I didn't. I would compromise. I would conjure. I would come up with things in my head and my mind telling me, hey, you Josh, don't do it right here, right? Talking myself out of it. And the key principle there is you can't control anything or predict anything. You do not get paid to predict. You get paid to react. You only get paid in this game on a consistent basis if you can react appropriately when you see your edge. Once again, where is it? Your stimulus, right? Your stimulus, response, input, output. Your input is your edge. Your output is your execution. You see your edge, you execute regardless. I don't care if it's FOMC. I don't care if news is dropping. Listen, every trader is going through different things, right? So I'm not saying it's perfect. I'm just saying learn to execute regardless of what you feel right here. Because whatever you're feeling right here is the reason why you're not doing as good as you are, right? Follow the data, follow your principles, follow your edge, your strategy, and then at the end of the month, go, hey, how are we doing, right? And then reevaluate, right? Don't just decide on, Wednesday morning here when you see your edge that you're not going to pull the trigger because of whatever reason, right? Pull the trigger, put your risk appropriately. So let's go back to the Discord here. So this is where in SPY right here, I'm in this long right here at 10:19 a.m. So this is what the market looked like right here when I was buying SPX calls, right? I was entering in the market. It's very important. I study my entries. I study them, right? I think one of the biggest issues I used to go through is I would always go through and be like, oh yeah, this is the trade I took for the day, right? And I would look at the whole chart. But this is the thing. What's most valuable is you get familiar with what this looks like. Because when the market looks like this, you need to be pulling the trigger. You need to be getting into the market. You need to be buying whatever it is you're supposed to be buying when the market looks like this. Anybody can go, oh yeah, this was my trade. Look how beautiful it was, right? Like anybody can do that, right? Don't be that guy. Instead, do the smart thing. Study what the chart looks like when you're actually pulling the trigger. This way, come tomorrow, you don't talk yourself out of it. Or instead, you're more familiar with what your process needs to look like for you to actually enter into the market and assume risk, right? So that was our long entry. Another reason why I took this long here was look at the trend, right? Look at the DEMA, the 9 double exponential moving average. Look how it's hugging price, right? It's hugging price. We're not extended. This is a healthy trend, right? You guys know I always say it is very important that you understand that because a healthy trend are the trends you want to get into. Dude, look at FOMC. Look at this. Look how healthy this damn trend was. This thing sold off how many dollars? 10? 15? Look at how healthy this trend is. Of course it sold off. Look at that. Super healthy. And then the one spot we get extended right here, what happens? We get the pullback, right? So once again, learn what healthiness is, what unhealthiness is. And to do that, you need to study trends, right? You need to look, you need to compare, right? You need to go, hey, learn to follow what looks good, what doesn't. So yeah, that was our long entry right there. I'm going to flip to SPX because I want to show you guys, right? Look at this gap fill here. So we got a massive gap down yesterday in pre-market, all this space. So this was what I was targeting, right? We literally have all this space here above PDH to yesterday's price action. This is what we call liquidity. This is what we call orders, right? This is our magnet, right? This is our opportunity, right? This is our potential, right? If we see strength above previous day high, this is what we're targeting, right? If buyers can get acceptance here, like I talked about in the pre-market plan, this is what I want to capture, right? So once again, we long the market right here on this candle, stop below the red, and we caught a glorious move here all the way up into the gap fill. Right. So really good trade. I'm really proud of it. And what's really cool here is if you go into Trader Chat, you're going to see the team was killing it. Right. The team was capitalizing on this really good here. Everybody was hopping in, capitalizing on it. Right. And here's me going, hey, look, I'm targeting XYZ. Right. So we're going to wrap this up, guys. But more importantly, I just want this video to be a primary example of stimulus and response, right? What does that mean? Action, reaction. Ask yourself, why are you making the decisions you are? And do they need to change? And if so, what do you need to do to change them? This is why Discord groups are so powerful. If you're in the right one, this is why courses are so powerful. I don't care if it's whose course it is. It's beneficial. You need more knowledge. And more importantly, this is why studying your trades and your data is highly effective, right? So guys, I hope everybody enjoyed this. Click the links below, get involved, and remember, execute your strategy. I'll see you guys in the next lesson, and happy holidays. Peace.